So, Sid, I just want to pick up on something you said. You're not sure if we've seen capitulation. I mean, when we do talk about some single stock stories being down 40, 50%, a lot of people are going to hear you say that and be like, wait a second, like, I don't want to see any more damage to my portfolio. Are there certain areas that you're more concerned about when we talk about capitulation?
Yes, and that's a great question. And thanks for asking that. I do believe that this rate hike cycle, at least the rising rate environment, is not very friendly toward the likes of technologies of the world, right? So that's the area that we are still showing very problematic relative strength compared to the market. So good parts of the market are already down to a great extent. So we do assume bulk of the damage is done. But at this point in the cycle, which seems to be late innings, either on rate hikes or rising, 10-year or 30-year long bond yields, or where equities are in terms of benchmark indices, I do think we are in late innings. But to suggest that a capitulatory environment has happened is difficult. We haven't seen the kind of surge in volume in sell-off periods. We haven't really seen a sharp spike in volatility indices yet, right? So we are monitoring for all that, but it's very difficult to call for capitulation at this point in the cycle.
Okay. When we talk about tech stocks and the damage that's been done there, just the loss of market cap, it's interesting. I think that the value of Facebook is similar to what it was 10, 15 years ago. I mean, that stock's been really punished. Part of the issue for many US companies has been the strength of the US dollar, their global companies. What do you see as it relates to the U.S. dollar? The strength has really damaged so many companies and country currencies as well, of course. Do you see that peaking? This is a big deal in the market these days.
So purely from a technical perspective, the 114 level that we recently had, that was a very good level of pivot from a trend channel, from a longer term point of view as to how far some of the mean reversion indicator had peaked. So it's reasonable to say that we are in an environment that US dollar is probably likely to begin to consolidate. I'm not sure if I want to suggest that it's over in terms of rising or strength of the US dollar, but it's very reasonable to say that the next bigger move or the next bigger environment for US dollar is probably about consolidation, more of a range bound, something similar to 2015 and 16 that we had. That probably will give the dollar some overbought relief, and then it will probably be able to resume its strength again. But as it stands, I would say the 110 is a technical pivot. Below that, we're looking to as low as 108 and 106 for DXY index, and that would be supportive for equities, in my opinion, or at least risk assets, if you will, just
Hmm.
given how its strength was, putting a lot of pressure on risk asset returns.
And where does that leave the Canadian dollar? I find it so interesting. And I don't know, I mean, certainly the weakness in the Canadian dollar has been a reflection of the strength of the US dollar, but it's also interesting in terms of having such a strong price of oil, and yet it wasn't really reflected in the Canadian dollar. And we are so often viewed as a commodity currency, but it didn't help. And sometimes that can be a reflection of what the global players think of the Canadian economy. But what are you seeing from a technical perspective on the Canadian dollar?
Precisely to your point, the fact that the commodities were not able to help the C dollar. And it's very reasonable to say that the strength of the commodities in general are becoming also questionable as we go forward with the strength of the US dollar or the slower global growth, perhaps. That's not going to help the C dollar either on that front, right? So we are viewing C dollar to be at best range bound with a persistent low or high pattern. So C dollar in our estimation is likely to stay on the weaker side. It will have bounces, but those bounces are technical mean reversions within a structural downtrend that is likely to keep pressure on the C dollar. I don't really see the cycle for the C dollar to be over yet either, right? So we do assume at best we will consolidate or bounce, but resume downtrend forces as we go forward.